Let's start all the fun, and I'm sure people will join as we're coming through. So I'm going to get into it straight away, and as I know everyone's looking forward to personal credit as a favorite area of everybody. Right, so I'm going to share the old screen and get into the PowerPoint. Just run through what we're trying to achieve. Everyone will know who we are because everyone on here is a client. A bit what we want to cover is what the Financial Freedom Club is all about. So what is the Financial Freedom Club? I was getting a lot of conversations with our clients who need a bit more support to achieve financial freedom, and I've got it right behind me, so I'll cover it like that. And I think one of the most important things is the different aspects. So what we've said is we've started to do this program for everybody. They can go back and watch it over again and see some of the insights to help them on their journey, because there's so many different facets and it's so hard to speak to everybody about all the different areas that need to be covered. So I'm going to click on this as we're going through, and if I can do that, if it lets me, that's it. So these are the areas that we're going to cover today. People are seeing them. As I said, a lot of people are struggling to know how the steps are and know how to implement the steps. As above, as we said, that's why we set the Financial Freedom Club. And what we're going to do now is actually go through the different facets of the Financial Freedom Club's going to cover. We're concentrating on personal finance, and today's webinar is all about still personal finance, but a special section of it, we'll get onto it later. Business finance, wealth and assets, retirement legacy. This is how you unlock financial freedom. So as I said, today's focus is on the personal credit score, because I know a lot of people don't really know how that works and why it's so important. And then we'll finish off with a Q&A. Don't be shy, everyone. Ask the questions because they are so important to get understanding of all this fun. So I'm going to get onto the old spreadsheet over here, and I'm going to just click onto that. So we started last time, we went through cash flow, which everyone will be able to access this. That's the first part. We talked about some of the stuff that you need to put in, our annual costs, just doing a little recap. But today we're going to focus on credit cards, loans, and the impacts of all of this on your financial position. Can everyone do us a favor? The first thing I would like everyone to do is download, if you can, it'll take a few minutes, is to download the ClearScore app. And what I'm going to do is actually pull it up here. You can see it. It's called ClearScore. It's a free app. And the reason why I'm asking, I've used it familiar, there is a lot of different ones, but as I said, this one's free and it gives you a snapshot of your personal credit. So important. So that's why I've got ClearScore. There is many other options as well, but this is the one I've been using. As I said, it's free. It's pretty good. It's helped me quite a lot. So I'm sure it will help many people on there. If there's anyone who is struggling to do that, let us know in the chat and the team will try to help you, because the team have done it as well, got them to do it first. So first step, download this ClearScore app. It takes about 5 minutes to download it and do the stuff, but it's really quite important, because if you know what your score is, you know then where the areas you're not doing well and what to improve. And it's so fundamental to everything you do is to have a good personal credit score. And as we go through all the different things, you'll realize why this is so important. One of the really good things, and I've got this on the screen for everybody, is when you download it, it gives you your own personal credit score. It also tells you where it is in relation to your area and the average across the UK. As you can see, every credit agency or tool is different. I'm talking specifically about ClearScore and what their numbers mean. The maximum is 1,000. I don't think many people would have got the old 1,000. I haven't. I thought I got good credit. But you want to go through all these different areas to see how you can improve it. So if you got 0 to 549, as it said, it's below average, but there's a lot of stuff you can improve. 550 to 624, as mentioned here, is probably an average score. And I think most people, and I'll be corrected, probably on average will fall on this, because I believe the average score of the UK, and I'll check this, it tells me on my one, is, let's wait, the average score of the UK, if I look at it, it's giving me my number, is 585 for anybody. And in our area, I say in our area, it depends on where your postal code is, but in area, for example, in Hertfordshire, apparently the average score is 616. So every area, there'll be an average score for that area as well. It's interesting because I assume that affects the credit, because they probably may take into account where you are in the country. What you want to do is obviously get up to this one. Most people won't be getting over 800 unless they've really worked on it. And we'll go on to why that is quite important. I hope everyone, if you can do a thumbs up, if you've had a chance to download the app to help us, because this would be quite interesting. If you can, drop us a little thumbs up in the message that if you've downloaded it, or if you have any problems, drop a little message and the team or someone else will try helping. I think I've got some message. Oh yeah, someone's put a thumbs up. Love it. Downloaded. Excellent. That's really good to hear. And I'm just looking at everyone else. So yes, this is really useful. The reason being is, as we're talking through all the different areas, and this is purely to give you insight, because the foundations of financial freedom start with your personal credit, especially for everyone who's based in the UK. We live and die by this basically, and we don't even know often what it means, why it's important. So what I'm going to do now is talk about some of the things that affect it. There's some major areas, and I've got them in the old spreadsheet, so I'm jumping over here. And part of our template that everyone will get, we'll put it onto Kajabi, which all our clients and whoever was watching this will have access to, being part of the Financial Freedom Club, is how to track it. And I've sort of done this because people just don't track their personal credit, or they don't track where they're using it, and often lose a lot of money. So what I've done is, you can put, and I've just put some examples, but you can populate these, not a problem. All you do is go to the list sheet and you look at this, and you just type in what your credit cards are, any borrowing that you're doing, or anything that you've applied for credit that shows on the report. You can add it in here, and therefore you can track it. And what happens here is then it comes up, there's like a little drop down. So, and it's really quite important, because then you know what you're doing. I know I've got a few here. I can change this. I whack in, I don't know which one have I got. Let me whack in Nat West. I don't think I'll put that one there. Okay. It doesn't really matter. It just matters for your ones, what ones you've put in there, which ones are relevant to yourself. I'm just whacking a few. Ooh, I actually got more than one MBNA MasterCard, to be honest. That's probably why I've got this. There's the Visa card. What you realize is credit is so important, and I'm going to explain to you some of the tricks around credit and what you need to think about. So what I've got here is how much credit I've used. So this is what your amount is that you're going to have on your statement around how much you use. The credit available is your total amount. Very, very important. And obviously I've got the balance, which I've done is actually what your credit used is. And I put it there because they actually, even though they mean the balance and your credit used is probably the same thing, but people don't understand the difference. So I've put that. What I also have put here is you can work out what your total credit is, because all these balance credit available, I'm going to cheat here a bit now. What I'm going to actually have is this number here. I'm going to drag this down so everyone's got this. Is so important, because what happens, and this number here, I'm going to highlight this in front of everybody. And why I'm highlighting that is many people don't realize that if I've got a credit card and it's got £50,000 credit limit, and I use more than 30,000, that's what this number here is, I'm actually in problems, because what the credit agency will do is they will downgrade my credit, because they will say I can't handle the credit I got. So even though I've got 50,000 of my credit, if I use more than 15,000, should be off this number here, I'm actually going over what they consider good borrowing. So you've got to keep track of this number so much that I would, it goes depending where you are in your journey, it's not even your overall credit, it's actually done by each credit card as well. So when you go to ClearScore, what it will do is it will give you a rating of each credit card and how it is in terms of your credit rating. So what you want to do is, if you're doing, and we'll see some options that you can do later with the credit, is if I add up all my credit cards, I want to make sure, number one, if I've got, say, I'm just going to cheat here and copy, and I say, look, this has got 10,000, right? My actual credit should be no more than 18,000 used, but I've used 10,000, so that's okay, because 18,000 is 30% of 60,000. I hope everyone's following me. So this number here is the most that you should use, not the credit limit. And people don't understand that, because if you go over 30%, they will actually reduce your credit rating and you'll start falling. If I go back to here, this rating will be affected. And we'll get on to why that's quite important a bit later when we look at all the different options. What they do is, many people have a mix of different types of credit as well. So I'm focusing at the top here on credit cards, right? You also will have overdrafts. And I know one of my team members has some key questions, and I know we'll get in the Q&A. But even if you agree credit, I would not use more than 30%, even if I've got an agreed overdraft, because that all goes into the mix. So if you go to ClearScore and you actually press on the credit report, right, it will tell you the breakdown of everything. Please note that your credit score on a lot of the different apps is always about a month to 2 months behind, because it gets updated depending on how regularly the credit card company or your bank send the information to the credit agency. And that tends to be on a particular day in the month, and every bank and organisation is different. So it's normally like a month or 2 months delay before it reflects. Why you want to make sure is, the higher credit rating you get better offers. And we'll get onto it. You may have noticed that I actually track any transfer balances that I've put in, for example, and I just put in the amount to track it. And the reason why I do that is, I want to know what my interest-free period is. And I'm sure people will ask me about transfer balances later, and I'll try to explain to them. So if I'm managing my credit, I want to make sure that I'm paying the least amount of interest. And if I've got a transfer balance promotion, in this case 0% for 21 months, all I want to do is pay the minimum payment and not clear it more than that. But when I get to the end of the 21 months, I want to make sure that I've paid it all back, or transferred it again if I haven't paid it back. And the reason why is because I'm going to end up getting stung with interest. So what I've done to help people is, can you see it highlights in red here? So I'll put formatting so people can see quite easily which ones are out of date, like this one here, 19th of July, funny enough. Oh, I better clear that one. There was one over here which, for a credit card or whichever one it was going to be, that would have overrun. That date is linked to this date up here. That's today's date. And what I've done is I've put 30 days from that, because everyone probably does this once a month if you are quite really on your finances, and you want to know about your credit and what promotions you're going and when are they going to run out. The flip side, if you don't use credit, some people say, Z, why should I don't want to use any credit. The problem is, if you don't use credit, they think that you're no good and they don't give you no credit. And when we get onto later around investments and mortgages, you'll realize why that's quite important to have good credit. And as I mentioned in the first episode, I built my business on utilizing leverage, both credit cards and loans. I do have to say, you have to be responsible. You have to know yourself, how you're going to react. And also when you do invest money into a business, and there is some tax advantages on that, you need to know that you're going to be responsible and it's going to pay off. I know that's a bit scary, because if you borrow money and you can't pay it back and you've wasted it, you're going to have a debt that is going to cause you problems. So be responsible, really do an appraisal, maybe speak to, if you know, a good accountant, tax advisor, I hope you do, have a chat just to make sure what likeness of success it is, because like anything, debt is only useful if it's used properly, i.e. good debt. That's what we classify this. Also, as I said, overdrafts are quite powerful. Use those really sensibly, because you'll have agreed interest rate or agreed tax interest-free rate. Try not using all your credit up, because they come under the 30% rule. Some agencies are different, but generally most credit agencies score you on up to 30% of the balance at any time when they take the credit rating. The other bit is I wanted to talk about is loans. Right, so personal loans are also based on credit rating. So they can actually be beneficial if you use them properly and not use them to buy liabilities or spend them to waste money, because people use loans sometimes to consolidate their credit card and clear their debts if they got in some trouble, or invest into a business. But what will happen is, whatever your credit limit is, that will affect it. So that will go into the pot of your credit. So really quite useful. You can actually look here, and it tells you, there's another page here, it tells you how a loan actually affects your credit rating. A couple of things it does. Anytime you get a new credit card or loan, it can affect it temporarily, because they do something called a hard search on you. So you've got to be aware that anytime you apply for credit, it will affect your credit rating. So I wouldn't recommend applying for credit if you're going to go and get a mortgage, because you might not get the rates or even get a mortgage depending on your credit rating. So timing this is really important, and understanding what impacts it has on your credit. And I want to also talk about not just personal loans, because your personal loans, by the way, if you've got Clear Score, they will give you offers, believe it or not, depending on your credit rating. And you can click on them and go and have a look, both on transfer balances and personal loans. The other bit I want to talk about, because it's always so many things, is stuff like mobile phone credit does actually, I've got a little page here, and I was just pulling it up to show, it does actually affect your credit rating. It can be positive, because after you've had the search, provided you're paying back and you're using it, they know that you're using credit properly. But just remember that all your credit across the piece and how much you're using it adds up to that 30%. So if I've got 100 grand credit and I'm using more than £30,000 worth of credit, adding it all up, I'm going to have a problem. So it's really quite useful having this app and seeing what credit are, especially if you get onto my favorite part, is talking about mortgages. Why do we want to think about mortgages? Because a lot of people initially either get their main house, obviously take a mortgage out unless you're really cash rich, and they rely on their credit score, and they don't even know. Because when they look at appraising you what mortgage you can get, and this will affect many entrepreneurs who want to own their own house to begin with, is they will look at how much credit you're using. Because they will look at your affordability. That will all come up on their credit score and evaluation. So when they look at your income, i.e. the money that's coming to you from your business, if you're an entrepreneur, if you're a job, your employee salary, they will look at that in relation to how much mortgage you're going to take out. And what they normally do is, and I want to explain it in two perspectives, because we've got entrepreneurs and we've got people who are in salary employees. They normally look at your gross income less your costs, and repayment of credit cards, loans, mobile phone contracts, or anything else where you've taken credit, because all of it comes out in the wash, will be less net expenditure or disposal expenditure for a mortgage. And you can't take a mortgage out if you haven't got the income to cover the mortgage. And I think many people don't realize, and when it comes to mortgages, please realize that whatever you put on the declaration has to be accurate, because you can get yourself into trouble if you put numbers that are not accurate. And they already know your numbers because they can look at your credit score. What I wanted to also get onto is investment property. And one of the things that people constantly ask me is, and I'm talking solely about people who bought investment property in their own name or with their husband or wife. And the reason why I'm saying that is that also can be affected by your personal credit score and your tax position. I'm going to elaborate a little bit more on that. So a really good question, actually, one of our posts that we did on social media when we had a financing expert on one of our podcasts, and I would watch that, the finance podcast with a gentleman called Kilmere, who's part of our mortgage broker, was kind enough to do a podcast with us to go through all these different fun things, and the team did a short little clip from it, which raised quite a lot of queries around it. Is when I'm borrowing money for an investment property, they look at a couple of things. One, what rent in relation to the mortgage. So I'll give you an example, right? If I've got a mortgage of say £1,000 monthly, the rent, if I'm, and this is the second part, I'm a basic rate income taxpayer, i.e. earning less than 50 grand, will be 125%. So that means £1,250 rent, whereas mortgage will cover £1,000 mortgage. People don't look at that part because they just look at how much of the value of the property is and can I get 75%? Yeah, but there's different parts of the criteria. Why did I mention tax? Not just being an accountant tax advisor, why have I mentioned that? Because if you're a higher rate taxpayer and you buy a property in your own name, an investment property, not your main house, but an investment property, it's actually even higher. It's 145%. What that means is if the mortgage is £1,000, that means I have to have rent at £1,450. This coverage of debt, i.e. versus rent, it can lead to you not getting the investment property and getting the mortgage at the amount you want. So your income and your tax actually affect what investment property you get as well, if you're buying it in your own name. If you buy in a limited company, I know that's a separate conversation and we'll cover it in the business modules later, is that it's actually 125% irrespective of your higher rate, additional rate and everything else. So it varies depending on your tax rate. High rate's 140 and 145% is if your additional rate, just to let you know. But I was giving you the highest level and the basic level. And a lot of people don't really understand that and they think why they're not getting mortgages, and this is what causes a lot of problems. So what we suggest people to do is, going back to this tracker, is document all the different types of debt, i.e. what credit available they've got, how much they're using, irrespective of what it is, and what balance and how they attack it. Because my suggestion would be is to make sure all your credit, and if you looked at my credit report, nearly every single one that I've taken where I've got debt is below 30%. I think there's one credit card that I use on a regular basis because I get cash back. That varies, but because it's on a monthly basis, because I clear the whole bill off, that doesn't really affect it much. But what does affect is where you've got outstanding balances and you haven't got the 30%. So I think really, really important to invest that. Use this tracker, write down, then you do a strategy, which I want to spend a few minutes on. How do you clear your debts down? First of all, you make sure they're below 30%. That's number one. Number two, what you do is you make sure that the interest that you're paying is the lowest. The lowest it can be is obviously 0%. That's where the transfer balances come in, right? So you can do strategies between the different credit cards, right? And if you have clear score and you know you've got good credit, they will give you loads of promotions. They will tell you, just press the button, you can go and you can get up to, I've still got ones going 25 to 30 months. You do have a little fee that you have to pay, which is nominal, 1 or 2, 3% of the money you borrow, but you can transfer the whole balance and pay 0% during that period. So you can then help manage to clear the debt off if you haven't got the cash to clear it off. So debt can be good, personal debt, and using personal credit because it improves your rating, but you need to manage it and make sure you're not throwing loads of money away. So this is why I wanted to go through this, because a lot of people don't understand this, and hopefully they're getting a few golden nuggets, and especially when they're starting off, and most people, especially if they weren't sure and they're buying their first house or their second house and they end up buying it in their own name and they get affected by all these different aspects. It also affects your business credit, because loads of people don't realize if you're a director, you get a credit score done on your personal name as well, because a lot of times they want personal guarantees. So your personal credit is like the foundations of everything. And since we're in an economy, we call it a credit or debt-based economy, which is based on credit. If people don't realize, our whole currency and whole financial system is based on debt. It's not based on assets. The reason why you have to also know why debt can be your friend. We're getting scared. I've been concentrating on the first bit around how to manage it. But why can debt be your friend? And I mentioned before is because inflation, as the prices go up over time and your debt stays the same, that means the bank is paying the inflation, not you. And I mentioned that in the last seminar that we had, the webinar about this. So debt can actually become your friend if you know how to use it properly. I know everyone's got different perspectives on it, but the nuts and bolts of it is debt is useful if you use it properly. And I'll give you a quick example, which I did give on the previous one. If I've got an interest rate of 5% and the inflation rate is 10%, which it has been, and some, if they, you'll realize they don't always tell us the correct inflation. The 0 to 5%, I have rent which covers it. 5 to 10%, right, covers it from the cash flow of the rent. 5 to 10% is actually the bank paying back on my behalf, because inflation is killing the debt. So really, really important to understand these, and I'm sure we're going to get loads of questions. So I just thought I'd cover the key items on, and I'm sure there'll be many more. Hopefully everyone understands how to use the template, track it, how to manage it, and what to know about how to improve your credit score, because you have to use credit. If you've got no credit, that's not good for you either. They actually want you to have credit, and then I would use it responsibly and try to use it to buy assets or manage your expenses in an efficient way, because if the bank is paying and you've got your cash in your bank account, you can actually make money from holding the money in your bank account because they'll pay you interest, while the bank or the credit card company is paying your debt. But if you don't budget and track your expenses, and if you're someone who struggles, then really, really be careful on how to use all the credit. What I'm going to do now is go open it up for a bit of Q&A, because I know a lot of people will be asking some questions. So how we're going to ask questions is in the Q&A. Ask some questions around personal credit, and everyone, don't worry, we'll be able to get this recording. We'll save it on the Kajabi that everyone will have, and if there's any questions, please drop them now. Really good question. So someone's asked about if an overdraft, if it's arranged, does it affect your credit score? All debt affects it. The only thing is with arranged overdraft, a couple of things. One is you don't end up paying unauthorized interest which could be quite excessive if you look overdrafts. And number two, really good point is depending on, so if I've got £1,000 overdraft and I only use 300, my credit's increased by 1,000, but I'm below the 30%. If I use the overdraft at £950, and a lot of people who, especially when they transition from student debt or they've done qualifications, they've been using the interest-free overdraft, they don't tell you it's hurting your credit because it's showing that you can't use credit. Does that answer the question? Thumbs up. I think it does. If it's not, please do ask a follow-up question. Any more questions around credit? Really good question. Okay. Does a student loan count as a loan and affect your credit score? Really good question. So many entrepreneurs who've studied or had loans, it doesn't, believe it or not, from my understanding, because student loans don't show up on your credit score. However, the thing that you've got to be careful with student loans is, and they don't really explain this, a bit outside some of what we're talking here, but really quite important, is that first of all, it will affect your income, because when you have your salary and you earn over, depending on which loan scheme you're on, because there's different student loan schemes, it will reduce your income because they charge you 9% over a certain amount of your income in tax. The second thing is that they're charging you interest at quite a high rate, which is over inflation rate. So your loan will continue to grow, as in the capital amount, and your income's not necessarily paying it back. So you've got to be careful on how quick you clear that off, depending on how much income you're going to earn. Because most people, I think it's over 20 grand, depending on what loan system you're on, it will definitely affect you quite a lot. I hope that's answered the question. The next question that I've been asked is, how much can a hard search affect your score? This is not really known by many people, as in how much it affects, but what you can do is when you've done a hard search and you go to your clear score, it will tell you that such and such a bank is done a hard search. I would always ask before you apply to something, or even if you're checking something out, is it a soft search or a hard search? I would always ask them to try doing a soft search, not a hard search, because hard search will come up on your credit score and it will affect your credit rating considerably. It will drop the rating down. I've seen it drop 50 to 100 points, and it varies depending on what loan you're going to borrow or what type of credit you're taking. So this is why it's a bit more. Oh. Really good question. What would you suggest if you do not qualify for a credit card yet? That's quite interesting, because not many people don't qualify for credit cards, depending on what you've done. So I remember got my first credit card when I was 18. It's just the credit rating tends to be lower. So if you download the Clear Score and go up and see all the credit card offers, they have some that you guaranteed 100%, some of them have 95%, some have what success or 50-60%. But if you use your credit properly, even if it's a mobile phone contract or whatever it is, you will start getting credit, and your rating will go up, and then ultimately it will look at how much income you're earning, because you have to fill in how much income you're earning, and if you let that come in for 3 odd months to 6 months, your credit rating, because they can check against the card, or sorry, the business, your personal account that you've put in as the reference point. And that is quite important, because it tells you which current account. So I would use one current account where your salary is going through, use that as the reference point, and then it will give you a credit card potentially on that. But please do make sure you use the credit card responsibly. And there's different things you can use it for. As I said, transfer balances potentially. You can also use it to get cash, but that depends on your investment strategy. I hope that was useful, and hopefully makes sound that. What's the difference between a soft search and a hard search? The soft search, you can have a few of those. They don't show on your credit rating. It's something they do to check if you are eligible or not, right? And then if you go ahead with it, they tend to do a hard search, which does show on your credit rating. That tends to be the difference between a soft search and a hard search from what I've seen. And really important, because I know some banks, they do hard searches for things that you wouldn't expect. I had an example that I always ask them, and I say, I don't want to go ahead with it if you're going to do a hard search, because I'm not sure if I'm going to take it or not. Hope that's answered that one. How do you pick a credit card? Great question. I look at what I'm going to use it for. So I came out of university, or had some debt, and I was like, which one's going to give me the best promotional rate, right? So two things actually. How much is the fee to transfer balance if I've got existing debt? And number two, how much will be my credit rate, transfer balance rate? So you can get 0% for, as I said, 20 months, 30 months. That's on the amount of credit that you take, right? But there's a fee attached to it, and that will vary. Some of them even charge up to 5%, which I wouldn't bother with. But I've had them low as, I've actually had one that gave me a 0% because I had really good credit with them. But you can have ones at 1 or 2 or 3% that you take the fee, and then you use that. Because if you use your credit and you start buying stuff, even if you do your regular stuff that you're buying with credit cards, this will build up your credit, and it will help you when you come to mortgages and things like this. But you have to be responsible and know what impact and track it. Has that helped you understand how to pick a credit card? Potentially? Yes, perfect. I think the other bit is people, I want to focus a little bit more, unless people got questions coming in, around how do you utilize credit a bit more. So one of the things that people don't realize is how you can utilize credit to invest in assets. And while I talk about assets, I'm not talking about cars as in something that I'm going to use and then I've got a massive car loan and then I'm like, that's a liability. For some people, it can be an asset if you need it or a requirement. So that can be a smart way of managing it depending on your credit score. But I would normally think about either investing it into a business, and we'll spend a bit of time on that because we've got some time, which is very rare, or you can invest it into a property investment. So what people do is, and I've seen this done, is imagine I've got 100 grand's worth of credit and I want to get money for a deposit. This is one way. This is not financial advice in that sense. I'm just giving a way of using it. What I can do is lend the money to the business. I'll be below the 30,000 or 30,000 below. Use the credit. If I got it over 2 years, that's like an interest-free potential loan to the business, and use that as a deposit. What I can actually do is then charge it interest, i.e. the business, for loaning money in via a direct loan account. And that's where you need a bit of an accountant tax advisor. It can be quite efficient depending on your personal tax position. So you do need advice, you need to structure it because it varies depending on what you're doing. But it can be a good way of getting money in and then getting the money out to pay the minimum payments that you would have to do. So that's one way of using it. I would actually charge interest to the business potentially on that. And that's how I get my value, because that interest I charge is corporation tax deductible. It will come back to me as personal income, but depending on how I structure the income, that will potentially be quite tax efficient. That's number one. Number two is using personal loans, which one of the things I've done, and I know some people we've advised, the clients have done this in a smart way, is they've taken a personal loan out, especially when they were working or they had good credit, and put that straight into the business. What you can do is, you can do the option number one I suggested, but you can do something different as well with a loan, because a loan is a qualifying event and it's got different rules to credit cards. So the interest that you're getting charged on your personal loan, you can actually claim that on the self-assessment and increase your personal allowance. Please do get tax advice. It has to be reported correctly. But if you do it, it's called a qualifying loan. So different facilities have different tax benefits as well, and cash flow, and they can help grow your business using the leverage. Especially if you're doing investment property for example, in a company, this is quite a smart way of utilizing it, and you can easily articulate it. So credit is very, very important. So really make sure. And anything you do, by the way, you will get personal credit score. The thing I didn't mention, and I had this, as the team will know, is I went abroad, I came back, and using ClearScore, I had a parking fine. And these buggers, I'm being polite here, did a CCJ county court judgment while I was abroad within 14 days in August, because I think, being cynical, from something from years and years ago, because they knew that I wasn't going to be in the country. And that's what they're starting to do. They took it and they basically then affected my personal credit. And being in my profession, I can't have bad credit, because one of the things that a lot of the accountancy bodies do, they do a credit check. So you need to be able to understand any changes in your credit report. So having these ClearScore apps, you check on a regular basis, and they do like a push notification, your credit score reports out. So you can actually see what's going to happen and then go and deal with it in case you never received the letters, or it was late, or got lost in the post, and all sorts of these things. And it helps you be proactive to manage it. Oh, I've had a good question. What effective ways to build credit for someone who's new to a credit card? I would go on something like the ClearScore app, put your details in, right? And then look at the promotions. So there's offers on there. If you look at it, it gives you offers. Obviously, ClearScore probably making some money by getting the offers, but it tells you what the credit card companies will give you, or the banks will give you. And then you go through it and you look at what score rating, and having that credit and then using it. What I would do always is, first of all, use the credit card to clear my expenses. So if you've done the personal budget tracker, which we covered in the previous seminar, it will tell you how much money I'm spending. And instead of paying it in my debit card, I start using my credit card, right? But you have to manage that credit card to make sure you're not overspending compared to what income you're earning. By doing that, you start building good credit. I actually started using credit cards straight from age 18. I've used them for multiple businesses, from promoting student nights at university, which helped me build a massive good credit. I wouldn't have them. Back then, you could actually take money out from the credit card without them charging you interest from day one. Now, they are a bit different unless you are doing a cash transfer. They have to give you an offer. Before, they used to let you just take the money and give you the interest-free period, which is normally most of them 56 days interest-free. So that is someone, if you're new or you haven't used it, or you're trying to build up your credit, use credit, but use it efficiently and use it responsibly by tracking your cost. So if you're buying certain things every month, like petrol or things like this, that you know you're going to spend the money on no matter what, why pay for them in your own card? Pay them with a credit card. Set up your personal accounts in a smart way where you put in some money aside to cover for the bills, and then use up the credit-free thing and then pay it back when the statement comes back by the date. One more step I would put in is, and I found this really powerful, is put a direct debit in. Don't wait for itself. So what happens with the direct debit is that at the when your bill is due and the date, they automatically take the money out, and you can choose if you want to pay the full statement, or three things you can do. You can pay the full statement, or pay a pre-amount before, or secondly, pay the minimum payment. And I'm just going to spend a few minutes about the minimum payment. The minimum payment is the amount the credit card companies expect you to pay every month if you don't clear the statement. I would only pay the minimum payment if I've got a transfer balance or a cash transfer sitting on there, because they've given me an interest-free period for a year, 2 years, or whatever it is. I don't want to pay the full balance. I only want to pay the minimum amount. I hope that answers your question and gives you a bit more value around why that is important. Thumbs up, yes, maybe. Any more questions on old personal credit? Also, everyone, excellent. The other things is when you're taking stuff out as a director of a limited company, which many of the entrepreneurs on this are, I would really make sure that your personal credit is good, because what I've found with quite a few people, that even though they're taking business credit, they also do a credit reference check on the directors. And if they do credit reference check on the directors, what ends up happening, unfortunately, is they get rejected. And I've seen clients with millions of pounds of assets not really be managing their personal cash flow, and they're getting rejected on stuff like just trying to get a personal credit card or get a business credit card, where the credit card company is also done a personal credit check, and because their personal credit check was so bad, they've refused them business credit, which is a bit mind-blowing because it should be actually separate, but there is organizations that do that. So being a director, you've got this dual part where yes, you'll get a director of the company, but they assess you as individually on certain items. Hope that is useful. Is there more questions on credit and why it's so important? I want to touch, I know I talked about earlier about mobile phones. Any one bit of tax planning, because I love our tax, is that if you've got a company and you've got one phone, you shouldn't really put it in your own name. You should put it into the company name. And what it's doing actually is about 3 or 4 different things actually. One, your personal credit will actually get better because it won't be affecting your credit amount. Actually, if you're going to use it then later for mortgages and you need your credit availability to be higher. Number 2, in the company it's tax deductible, and you can use it personally as well because you're allowed one phone per director. So it's corporation tax deductible. And thirdly, if you're VAT registered, you can also claim the VAT back, but you do need to pay it from the business account and make it into the business account name. You do need to go and check with the company that's providing the mobile phone that they're happy to move it without increasing the cost. So I'll give you an example. We had my wife had one, her mobile phone company weren't willing to do it, but ours was without increasing to business rates for mobile phones, which was extortionate. So we changed hers over to the same company I had mine on, and they kept the rate the same actually, i.e. what the monthly charge was. Therefore we improved her credit rating, and we made it a business expense and therefore saved corporation tax and personal tax, because we now don't have to take the money out to pay the bill, and VAT, because at VAT, as long as you've got a VAT invoice, we've then saved 3 taxes and a credit improvement. I think I've covered quite a lot there. I think everyone on a Monday night is probably having a feeling on that. That is a lot of info. Is there anything else about personal credit that you would like me to answer? Wow, perfect. Has everyone, if you could put a thumbs up, has everyone found it? Oh, yes, thank you, Alfie. In the chat, Alfie has shared the Financial Freedom Health Check. Please do it. It's a free assessment that we've done, spent quite a bit of money to do it, to help everyone get an assessment where they are on the financial freedom journey. Those 4 things that I covered at the beginning: personal finance, business finance, assets stroke wealth, and then legacy stroke retirement. And if you do this, you get a free PDF sent to you. It is a few questions. It is about 5 minutes it takes to do, but it gives you a rough idea of the different areas. So when you're watching this, for people watching this back afterwards, this is how you know which part you need to improve on and where you need advice and our support, or areas that you need to do to get to that financial freedom, because ultimately it's a journey. Hence why I've got Unlocking Financial Freedom. Hopefully you can read it better than me, because it's the other way around for me. I hope you have a great evening. Thank you for that, and hope you enjoy the watch back. And please do give us feedback. If there's anything that you want us to cover on personal finance, we are more than happy to include it in the modules. There will be other aspects that we'll be including, such as investments and things like this, using in your personal name and things like this, and how to drive personal income up in future episodes. But have a fantastic evening, and thank you for joining us. Oh, by the way, I love all the thanks. Perfect, thank you.